Hey everyone, this is Kenny Coins with Marathon Money. I'm with Wes here, CEO of Applied Digital. It's been amazing watching Applied Digital. I know a ton of people that's in the stock, and they can tell me vast amount of information. I have a friend of mine, Peter. He's a big fan of the Applied Digital and think you guys are going to do great things. And he also gave me, as everybody else, but gave me a list of questions to ask you and things they want to know. But besides that, you've been doing this for a really long time.
Yeah, Kenny, first off, thanks for having me. I appreciate it. We've been doing this. So Applied Digital is, we've been in business for about 4 years, but I've been a tech investor, mostly amongst hardware, digital infrastructure for 26 years now. So I've seen a lot of different cycles and a lot of different new technologies and big waves and busts. And so this one has been by far the fastest and what seems to be, the kind of the largest tech revolution that I've seen in my career.
Data centers is like big now. It's like really hitting the market because pretty much everybody's going to be in some form of AI in the next 10 years.
Yeah.
You know,
So on the data center front, I just in context for history. So we started doing this, building out Bitcoin data centers, and we built out 500 megawatts, which is a significant number. I think that once we built that in 24 months. It's a lot of power to bring online in that short of time period. But we built those facilities, and we never mined Bitcoin ourselves. So Marathon Holdings, Marathon Digital is our largest customer as a Bitcoin miner, and so we run effectively data center facilities for them. And then in 2022 hired some guys here in the Dallas. We're based in Dallas, in the Dallas area, to look at adding high performance computing alongside of our Bitcoin facilities. And they were working for a company that was building data centers for, I believe, Meta at the time, one of the hyperscalers. And we designed a new style, high performance computing facility. We started building it in 22, and then ChatGPT hits in December of 22. So we were doing smaller scale builds, and then everything really changed for us in this market in kind of the April timeframe, right after NVIDIA had introduced their new H100, the next generation of their data center GPUs. There was a massive amount of demand. The facility that we were building was a really good fit for the H100. So that's how we started in that business. We landed a cloud contract with one of the AI labs that was founded by actually the one of the inventors of the transformer, which is the piece of software that makes generative AI possible. So we started down that path, and I went back to my real estate development team, my now data center development team, and said, guys, I know we were going to build 10 megawatt facilities. We need to go back to building hundreds of megawatts because there's a big wave of demand coming, and there's the data center style versus what we had in the past. So what's been built in data centers, for the past 30 years has primarily been around delivery of video. It's Netflix, it's Instagram, it's TikTok, and it was all developed around comms. And now we need to build around compute, which is what really creates the artificial intelligence, is the compute. And when you're building around compute, there's some certain things that we can dive into that the data centers need to be different. So we designed this, we started building at scale. We have a really large campus going up in North Dakota. And then we have a couple of other campuses that we're developing as well. But now we're building very large scale data centers for AI workloads.
like when you say all that with high performance computing and transitioning, it seems like you made a lot of transition, more like a lot of pivots, because that the market, it's moving so fast. It's like in 2021 you were here, in 2022 because of the change ChatGPT made, and then you got NVIDIA that came out with their GPU 100s. Um, how when do you think, to you, like, that technology is going to slow down to where everybody can catch up, or this is just going to keep being a pivot, and we're going to have to, basically, as an investor, we're going to have to rely on you to kind of say, look, we got to make this pivot because technology is increasing fast. For example, like DeepSeek, that literally rattled the markets on Monday.
Yeah. So it is about, so technology is, always moving faster. And, you think back to when the first iPhone came out in, 2007, it's been just, barely 15 years since that came out. No one, I mean, old guys like me can remember back to when, we were using Tegic to send texts on your 10-digit keypad. But and you just see it constantly accelerating, and now it feels like it's even more turbocharged from an acceleration standpoint because of the power of the compute that we have out. So we constantly are evolving inside of our business, and we're looking inside. We try to future proof these facilities as much as we can. Look, let's see what comes of the DeepSeek news. So the interesting thing about DeepSeek is, I'd read I think it was Christmas, they put it out, and we went through the white paper and looked at their V3 model, but it's the logic model, the reasoning model that came out, the R0, that started getting traction on the App Store, and then they talked about what the costs were and how much more efficient they were in training and inference. Let's see, kind of, that story is really evolving, so let's see how that plays out. But the compute has to get less expensive, right? If we're going to get AI to have the adoption that we expect it to have, and I think it's going to go everywhere, you need the cost of compute to come down. Just like, when I know my parents bought us an Apple IIc in 1985 that we used to program on. It had a monitor like this big, and it was monochrome green. And I think they spent $5,000 in 1985 dollars, which inflate that for today, for a computer that would do almost nothing except let me play like California games and Oregon Trail on it. And so, to see how compute costs have come down overall, we need to see that same thing. We need to see more efficiency, and I think this is a partial step in that. I don't want to jump the gun. I think kind of the lack of skepticism around DeepSeek. I saw Microsoft and OpenAI saying today that they thought that they stole some data through a sister company, and are misusing or not using the licensing correctly for the OpenAI, the GPT models. So let's see how that evolves first before we jump into it. But I think the really important thing is compute cost has to come down. It has to come down. But AI is driven by compute, and we need, we're going to need massive amounts, which is what we're building the infrastructure for. But we're going to see more changes in this market. There's no way that innovation never stops. And like I said, we've seen it accelerating, whether it was through wireless networks, whether it's through fiber optics, whether it was through software, and now on compute. And we're going to see it continue to get more efficient and continue to evolve just at a faster rate.
With the whole thing going on with like DeepSeek, and I think you're right, there's still a lot of things to be unpacked and kind of we got to get uncovered. But just the way you laid out how you pivot over the last 4 years, I was thinking that, is this going to be another pivot that you got to make the AI infrastructure, AI digital centers more to fit where DeepSeek took it, because it took it to another level supposedly, but we don't know.
Yeah. So I think the important part here is we're still using the same compute. We're still going to use the exact same architecture. It's just how it's being used on the compute side for model training, for inference. And that's going to be constantly evolving, but, and there's going to be, I'm sure, changes in compute. I still think, NVIDIA has an extraordinarily strong position and very big moats in the market. Even if the compute itself is used more efficiently, it's still going to be the same compute. That's what I'm talking about, the being able to bring the cost down. So, because in the past, when you're using a product, your cost of goods was, typically especially for tech companies, fairly low, especially if you're a software company, right? Your COGS line would be less than 10% of your revenue. So you'd have like 90% gross margins. And when you're looking at AI, the compute is the primary portion of the cost of goods. And if the compute is really expensive, you need to make the product really expensive to get the type of margins, to get a return on your R&D dollars. And so it needs to come down. And so this is a step in the direction, but I think it's important. It's the same compute, same data center architecture, same everything, just used more efficiently.
No, I completely understand that. And the next question I have is coming from one of the people off that listens to the show, but your North Dakota hyperscale facility and greenhouse farming, how are you meeting the power demands and the renewable energy that's viable for long term?
So what we have done, and this has been really the way we've built the company, right? It's just a matter of how we're using it. We've been very good at finding large amounts of low cost power. And what you need for AI is large amounts of power, even better if it's low cost. And so every site that we have done so far has been what we call stranded power. And that in North America, stranded power is a power that is being generated, but oftentimes cannot be used because there's not the transport grid to get it to a user of the power. So it's created one of two ways, typically in North America. Large power intensive industry goes out of business. So in Rockdale, Texas, which is big Bitcoin mining site. It's not ours, but that's just an example of this. There was I think it was an Alcoa aluminum smelter that used to run there, required massive amounts of electricity. They shut that down. All of the electrical infrastructure, the gen, everything is still there, but there's nowhere to use it. There's no user of it. And so Bitcoin miners came in and used that. The other way is typically renewable energy, wind or solar. If there's a lot of incentives to build these out, especially in the U.S., and the incentive is renewable energy credits is how it's typically paid. And so with renewable energy credits, if you're doing a wind farm, you want to generate the maximum amount of credits with the least amount of cost. So you want to go where the wind blows the most and the land is the cheapest. And this is why North Dakota is the 6th largest wind producer in the nation, and I think 48th largest in population, right? And so where we're sitting, there's about 2 gigawatts of wind that feed into a substation. And we sit and oftentimes those turbines will have to be curtailed because the grid pricing goes negative when the wind is blowing, because there's not enough transmission capacity to take all of that power out when the wind is blowing and take it to an end user. So what we did, take the use case, the power use right next to the generation, which is, the wind turbines. And so they feed in and then we use that wind. Now we still have base load because you need these to run, 5 nines reliability, 24/7, 365. But it's a way to go and find large amounts of power that typically are renewable energy that are not being used currently, or at least all the time, because you can build generation in 18 to 36 months, but to build new transmission lines, new power lines, can take 10 to 15 years because you need, all this permitting to build for long distances, regulatory, I think that we're going to get looser on that with the new president. But that's what we've been very good at, is finding that power, utilizing that power. It's typically very low cost power and it's typically renewable.
What about mini reactors, like nuclear power?
So for me, when I think about power and, the amount of power we need for data centers, the amount of power we need for, transitioning to electric vehicles, the amount of power that needs to be generated versus what's generated now, I think you walk through a couple of ways. So we've gone out and found a lot of the stranded power where we can take the use case right to the point of generation. That's great. There's only so much of that exists. Now there will be more that will be built. So we start using a lot of that power. There's more wind farms that are permitted. But then the next logical step here is gas. And so you use nat gas, and there's some stranded nat gas in Western North Dakota and Western Texas and Pennsylvania. Those are the key 3 places here in the US that have it. And so you move to using stranded nat gas. And then further out, you look at nuclear. I think it's just a long window. So you got to see, how do we bridge from here to there? But nuclear, it's, you probably have a guess that's as good as mine as far as when those can be permitted, built, on SMRs, the small modular reactors. I don't know what the cost level is. I think I saw some New Scale, I believe. They had something going in Idaho or Utah that was, I think, around 9 or 10 cents, something like that, which is an attractive power price. So if they're there on the technology, now the next phase is permitting. So maybe you can pull that ahead, especially with the new administration. You might be able to pull that ahead. But the way it goes in my mind is, okay, we get stranded power, then we go, you got to build gen with gas, and then you build generation with nuclear.
You keep talking about with the new administration. Do you think there's going to be a lot of ways for you to capitalize on what's going to happen for the next 4 years? Or you feel real confident that your company can capitalize on what's going to happen the next 4 years?
Yeah. The most important part is the market that we're serving, and number one, and that we're doing the right things in that market. But, having a friendlier regulatory environment, and it was already starting, by the way, even before the new administration started. So Biden in the last few weeks, they did this, this push on dropping some regs on data center development, because I think if this week has taught us anything, right, there's real competition in the world for AI. And I think this is a race that the US has to win. And so we're building, the infrastructure to help win that race. This is going to be the new arms race. This is going to be what the Cold War was in the 20th century, right? This is
Yes.
of utmost importance that we win.
Yeah, no, I see like you're kind of equipping yourself. You got a $5 billion partnership and with a company growth strategy. Can you like break down that, like what that strategy and importance mean for Applied Digital?
We announced the deal 2 weeks ago, I believe, with
On January 14th.
Macquarie Asset Management, I believe the largest infrastructure investor in the world. They've done a lot of data center investing. What that does is it puts the capital pipeline in place. So we have our power pipeline, we have our supply chain in place, we have all the pieces in place to go and build this, build out, what we want to build for the next 5 years. Now we have the capital partner to do it. And what that does is it takes we've had to do a lot of dilution at the public company over the past year building this facility in North Dakota. What this does is it removes it, and it says, okay, Macquarie is going to be our equity capital. And this is important. So the equity capital of $5 billion really unlocks closer to $25 billion of total capital, because you bring project finance, which think if you were, building anything, you go to build a house, you get a construction loan, and then you flip that construction loan into a mortgage, right? You typically get an 80% of the capital is mortgage on your new house. The 20% is your equity that goes in. So that's the way you should think of ours, is that 5 billion is the 20% of equity that goes in. And then we can get mortgage capital for real estate development that comes on top. That's how you get to the $25 billion number. It's really a powerful number for us. And for that, we're giving up 15% of a subsidiary company, not of our public company. It was a subsidiary company that is developing these facilities. And so anything that Macquarie puts equity capital into goes into that subsidiary, and we own it 85% and they own it 15%. But now everyone can know, looking forward, hey, we can go and build all of these campuses that we're talking about building. We have a really large amount of capital available to us to go and build it. And what the dilution is. It's 15% of that subsidiary. And so we don't have to just, last year we were constantly doing capital raises to keep up with the build cost, because this is billions and billions of dollars to build these facilities. So, but to have Macquarie, which is one of the, like I said, I think the largest infrastructure investor in the world, big name, a lot of expertise in data center, came in, looked at what we're doing, wanted to partner with us and provide that capital. And I think they'll be a real partner, not just a capital source for us, which was the thing that attracted me to them specifically.
So Can you give me a percentage how this expands your growth, like the speed of it? Because I know when you have to capital raise, because I've been a part of that world, when you have to raise capital for a company, it slows down expansion. Because now you gotta, every time you build something and you start running out of money, you kind of now we have to go back and raise capital. So we got to cut a slow, not really slow, like put a pause, but like you got to slow down what you're doing to go raise more money. With this $5 billion from Macquarie, what is the percentage of speed you guys can see happening for Applied Digital?
So you're completely correct, Kenny. Like that, it's been a big time consumer for our manpower at the company. Constantly raising capital and building this, and going on to the finding the next site, and contracting with customers, and all of those things that we need to do. So this frees up a lot more of my time and a lot of my team's time to go and focus on the building and expanding portion. So on the execution, rather than constantly working on the capital side, which we had to do because you need to pay for these. So it gives us all of the firepower financially to go and build a massive amount of data center capacity. It does it with, again, and now everyone gets to know this is the dilution, right? It's not a question, because we're getting working on signing the lease for our facility in North Dakota. As soon as that lease signs, what do you think happens? I know what I think happens is people are going to be like, they want me to sign that lease. They want the company to sign that lease, and then it'll be signed, and then it'll be great. And then they'll go, okay, well, what's next, right? And then when you're going on to what's next, it's okay, they got a new campus, new customer, but then there would always be a question mark of how much does that cost me in dilution? Like, what are they going? How much capital are they going to have to raise? And now we have this really easy formula of how we raise that capital. So not only does it free up my time, but for shareholders of our company, it lets them know specifically what the formula is and what the dilution is, instead of trying to guess, 2-3 years out of the future, like how much are we going to have to do that? Well, we set the formula. We get, like I said, it really adds up to about 25 billion of capital here if you do the 80-20 piece, and it provides a ton of firepower for us.
Now, with everything you said, which frees up your time, and I'm going to give you my little opinion piece, and you tell me if you think it's wrong. To me, when you get this kind of partnership and you got $5 billion coming your way, which you're trying to say is really more like $25 billion, I think what ends up happening to a company like yours, you can almost get more market share. Am I correct for saying that?
Well, this does two things for us. So allows us to go faster, and if you can go faster, you can get more market share. But two, the kind of, let's call it, we're still a newer company. We're doing what I think are really big things, but we're newer, and this is such a credibility stamp, in my opinion, for us, that lets us go and win more of that business. Lets us sign leases with I've been really clear, like we're focused on building for hyperscalers, right? These are massive companies, and now we have a massive financial backer, and that just helps us from closing business, not just building, but closing business perspective. And so I think it does add that for us, and so that we can do a lot more than we would have been able to do by ourselves.
No, 100%. And I'm gonna take it one step back. We were talking about in the beginning of like the agreement of the 85%. So that agreement gives Applied Digital 85% ownership stake in the future APC assets, and the other 15% belongs to the partnership you just made. Am I correct?
So yeah, we get 85, Macquarie gets 15.
And
So
then,
like I said, you get 15, we're taking 15% dilution for all of that capital.
and then how do you see that benefiting your like shareholders,
Yeah,
long-term investors?
the most important, like I said, is now we know what the dilution is, and there's in year 5, there's an opportunity for us to buy that 15% back to own 100% again. But like I said, it really sets the framework of what how we can get the capital for our growth without constantly diluting in the public market. So I think that's just a better framework for myself. I'm the largest shareholder of the company. I think it's a great framework for the company, and especially for the amount of capital that it brings in.
AI is kind of moving fast. So NVIDIA, those are like leading AI infrastructures. Are you partnershiping with like other similar companies?
Well, if you haven't seen this, but NVIDIA invested in us.
Oh yeah, I did see that. I did see that.
So we look, NVIDIA, we have a lot of other, I would say ecosystem partners, and it kind of sits on two sides. So you have the tech software, like, the server guys that we, worked with at the start and continue to work with. You get networking. You have all of these companies. So, we work with Dell, we work with HP, we work with Supermicro, we work with Cisco. And then there's a lot of storage vendors. So the big ones that we work with are Vast and Weka. And so you have that side of the ecosystem. We've invested in some companies that do a software layer on a cloud service, so like a scheduler and optimization software. So you have that side, and then there's a whole other side of the business where you're working with companies that have that are making chillers, and they're making transformers, and they're making high voltage switchgear, and they're making all of the what I would call industrial equipment that we use in the data center, buying cat diesel generators. The less sexy part of the industry, right, that people don't talk about, but is in extremely high demand. On the GPU front, we work really exclusively with NVIDIA at this point. They're the leader. I think their tech is the best. I don't see that changing anytime in the near future. And so, I think we're working with the best one there.
So I don't want to get too ahead of myself or too forward. So the external and internal data transmission, who is supplying that? Is that NVIDIA, or are you guys getting that from somewhere else?
What do you mean by external, internal?
Internal data, the transmission to meet the massive bandwidth demand for like of the AI cluster racks.
Oh, so you use a couple of different things, but this is where NVIDIA really sets itself apart, is with their InfiniBand networking technology. And so the InfiniBand, which has some distance limitations, which goes into how we design our data center builds. So with NVIDIA, their networking that goes with their GPUs, it's the complete system. This is why they have such a strong position in the market. It's their software in CUDA, it's the GPU itself, and then it's the networking, because with the networking inside the data center. So I talk often about, it was, the world before was driven by low latency outside the data center. So how fast can you get your video to your phone or your TV or whatever it might be? And now it's driven by latency inside the data center. So you need extremely high bandwidth, low latency comms inside the data center, because what it does is it interconnects, and these are just supercomputing building blocks, right? So it interconnects all these GPUs, but NVIDIA is, that's one of their most powerful pieces of the puzzle. So it's, I look at three pillars with them, which is the GPU, of course, the software stack that sits on top, but then the networking is right there as well.
Oh, NVIDIA has a wide moat. What do you believe your moat is?
I think our moat has been speed to market. I think the facility that we have coming online this year in North Dakota is the only one of this size available in 2025. And we, a lot of times when you're a small company, especially we're building infrastructure, what we do well and what we should do well is our speed and our, we're nimble, we're innovative as far as just how we get things done, how we design our facilities, but we can move much faster versus larger companies, and that's how we've gotten to where we are. We just need to make sure that we stay that way.
No, I see the same thing, and you guys are very agile. You guys pivot really well. You guys adapt to the market. And I think a lot of people see that definitely in the last 4 years, how you guys pivot and adjusted and be able to position yourself in the area of strength. But that also opens, like, by 2026, how do you expect like AI specific data centers market to be, and how do you apply digital plan to capture that?
Yeah, so it's it's a massive market. The thing that's interesting to me in this market, because we've seen really big markets develop before, right? Wire, like the internet overall, right? We started with the internet and that whole revolution that happened, but that spawned so many other markets, right? Whether it's e-commerce or video or social media or whatever, so many other markets. Digital advertising, Google obviously is a big market, and then you have the wireless cellular revolution, which was a massive, massive market. You see this big growth wave. So I think you're going to see something similar with AI. One of the things that on the data center and building out the infrastructure side, there's a huge amount of demand that everyone's talking about it. Everyone's talking about data center, but there's this limiting factor on supply, which is available power. And so what we have is a significant amount of near-term power, 25, 26, 27. And that's the focus, is building that out, because like I've said many times that I think anything that we can build through the end of 27, we can, lease and sell to a customer. And so it's really the focus, but I don't think it's about how much of this, giant market can we capture. It's really about execution. And I think, like I said, anything we can build through the end of 27, and that's, it's a 3-year runway. We've got 25, 26, 27. And so that's, I mean, in a market that changes as fast as this, that's, that's a long ways to look out. But I think it keeps going beyond that. So, but we're really focused on executing the next 3 years. And we've put, like I said, the Macquarie announcement was the last piece of the puzzle for us to put in place. So, we have the power, we have the supply chain, and now we have this big capital partner behind us. And so we're going to push really hard to see what we can get built.
Yeah, I feel like the Macquarie partnership was like your last piece of puzzle, because now you guys have a big, huge runway to like hit the ground running and just start executing. But it's kind of the last few questions I have with quantum computing. Even though Jansen said it was like 10, 15 years away.
Yep.
Are you guys making any plans to like start building data centers for that?
I'm making sure this is Topo Chico water, just making sure.
Okay.
So the data center infrastructure for that, and look, Jensen's way smarter than me about when there will be quantum computing. Our job is to build infra for whatever people need to use for computing. And right now, the infrastructure for quantum looks similar to AI. So it's high power density. The only difference is the ones I've looked at, it's all around the power's used all in cooling. You need extreme cooling typically. A lot of these, I think, systems run at absolute zero. You're using liquid nitrogen type cooling. So, but you're using the same type of density, power. You have different cooling systems. But we're having a look at that. But like I said, we want to be ready for when it happens. But a lot of the guys that you hear from and that I talk to are saying that it's going to be a decade away. So we've got a lot of stuff to do in the meantime, from building out for AI infra. So we're pretty focused on that, but we do keep an eye on it.
Well, man, right. Last question. What would you say to investors who are on the sidelines and haven't got into Applied Digital yet?
Look, I always tell people, you never know, like from a day to day. And I know, I know when people are looking at a market, everyone wants immediate gratification, right? It's just human nature. And so everyone wants me to make some announcement today or tomorrow or the next day, and and hopefully the stock goes up a bunch. That's not really my day-to-day focus. So I think people should understand that. I think we have a huge opportunity in front of us. I think we've put a really good team together to execute. We've put a lot of great people, partners in place. We got the investment from NVIDIA, and we have the Macquarie capital behind us. And so we've done all of these big pieces that, you know, were really hard to get done, frankly. I mean, those are big accomplishments in themselves, but those are just a means to an end for us, which is executing. We need to execute and build this out. But as I should be, I'm focused on the business, and I'm focused on long-term shareholder value creation. And so I think, you know, people should know that about, I think we have a fantastic opportunity, but they should know that about me. They're not going to see me out, you know, making press releases every week or whatever it might be. We have these big accomplishments. We'll talk about them when we have them. But we're, you know, really focused here at the company on long-term shareholder value creation.
Wes, I really appreciate you coming on. I like to do a conclusion of our interview. From I want to understand, you have a long runway. You have a massive backing with Applied Digital, and at this point, it's just execution. There's like very few capital raises going to be happening now. It's going to be straight on focusing on building new data centers. Am I correct? By saying
Right.
New data centers.
Yep.
And just kind of building it from there and executing and then starting getting customers into those data centers and leasing them out. Am I correct?
That's correct. And these will, you know, long-term leases that they'll create a lot of value.
Yep. Pretty much in really in the AI real estate.
Yeah. It's I would call it highly technical real estate.
You know, I mean, something that's going to be in extreme demand in the next 3 years, in my opinion. Definitely where the world is going with more technologies that's getting put on this planet. Data centers is going to be the most necessary thing out there. So,
agree.
Man, I really appreciate this conversation. I appreciate you coming on Marathon Money. Man, peace.
Yep. Thanks, Kenny. Thanks for having me.